following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 23rd day of November, day before Thanksgiving, and wish you all a very, very wonderful Thanksgiving. And if you're going visiting or if you have visitors, I hope you all enjoy it, have a good time. And thank you to our hosts, and of course, thank you to the TFNN staff and Tom and Tommy and my engineers, Al and Steve. Wishing you all a great Thanksgiving. We'll be back, of course, on Monday, taking Friday off. Market is open, and I will be sending out just a very brief, probably just the Dow chart that I usually send to my subscribers, plus the Traders Corner to update. We've got a whole bunch of new stocks that we've bought over the last few days. They seem to be doing very nicely at this particular point, but I am at the stage where if I have too many to follow, it's not a good sign, and it also means that we're getting some kind of a pullback. Some of them usually survive, but if they don't, we'll see what happens here. Meantime, things are looking quite positive in the market. The Dow went to, let me just run the numbers. We're looking at the E-mini. It's at down 450 at 21.95. If you look at the monthly, let me do this right here. Behind this chart, the 120 is the monthly, and it's in leg C with a week to go, less than a week to go. And a week to go. And what we're looking at here is that it's well above the 2116 9-period exponential moving average at 2195. That just reminded me, I meant to look at IBM. I was asked yesterday, and I forgot to put it down in my notes. I can't remember if I actually looked at it, but I will do that. I'll circle it. There you are. Okay. So we're looking at the E-mini continuous contract, which is the same price, trading exactly the same price as the December contract. The reason why I like it, I like to use it, I actually use it for trading as well, is because within the context of, looking at the longer term, I can get all the information here and it goes back. Whereas if I look at the E-mini contract, say if I go to ESZ for December, look, it's just got it's got a limited back data. I don't like that. So I go to the continuous contract, gives me everything I need. Here we go. The weekly chart is on a leg E/A, and the technicals are just now starting to, in the E-mini, the MACD is flattened out, which is saying to me at this particular stage, we've got upside potential, but it's a little bit limited until certain things happen, and that means there's some kind of a consolidation probably in the weekly chart. But the MACD is just one technical tool that I use, that I teach, and the stochastic, the slow stochastic is at 92%, which is pulling back from where it was just recently at peak B, but this is still very good action. The weekly chart is an E/A. Everything about it suggests that this is an A and not an E, but I'm just going to be very conservative for now. And the daily chart has gone to a new recovery high, a new all-time high. So it's still in leg B. And look at the spectacular 97% in the stochastic. And the MACD is just beautiful. This says we should be going even higher, even though we're going to pull back in the next day or so. Okay, let's get right down to the technicals. INDU. Dow. Dow is in leg C. It's a little bit ahead of the game. In the daily, technicals are fantastic, 98.75% in the stochastic. That is really good. The weekly chart I've got as an F/A. Everything about it suggests that it's probably an A. I haven't put the up arrow yet, which would say, yep, we're in a buy mode, but I'm real close. And maybe I'm just going to have patience and wait for the end of the week, wait for Friday, and then to the start of next week to do anything there. But in the meantime, back at the ranch, you'll see that the monthly chart is really fantastic. It is getting right into an area that I call in the Chapman Wave methodology, all of which I'll be teaching in a 3-part webinar twice in December, once in January, on a Tuesday night, December the 6th, I believe it is. Is that the 16th? I'll check it. Oh, the 20th and the 16th of January. I'll give a little more information in a moment. But in the meantime, This is the pattern that I call the Chapman wave stalk leg formation right there, called a stalk leg formation. I haven't even got into it for a long time because I've been waiting for it to unfold, but it is in leg D, and this Chapman wave inside track within the up channel is going to be really important because it has very strong resistance at 19,200 and 60s. It's moving slightly higher each month, but that's kind of where I'd be looking for some kind of resolution to this as a peak D and E unfold in the dailies. So what does that mean, the peak D and E? I'll go to that in a moment, but first let me just say that the Dow's up 24 at 19,048. I had said to subscribers in my daily overview and market today section that I thought that there was limited upside at this particular point, a lot of resistance in the 19,050s to the 19,090s. Today's high was in the 19,060 area, and we're trading just under it right now. But meantime, back at the ranch, if you look at the 120-minute chart, they've been moving up very nicely. I meant to go back to the E-mini just to show you something. Peak D or E is where you have to be really careful, and this is saying to me that we are in for some kind of a rotational correction now between today and Friday, maybe going to early Monday. But then next week, we should start seeing new recovery highs, new all-time highs as well, all around. So let me just get back to this. Oh, I didn't finish this one here. This is the 10-minute chart of the E-mini. It made a peak D once and made a peak D twice right there. The last one is at 2203.50, and that was this morning between 4:30 and then again 4:40. It's pulled back, made a little arch formation. That dreaded H took it way down, trying to make a V-shaped recovery. I think that it's going to be retesting, and it might even have to test the low of 2191.75 that was made at 10 past 12 on the 22nd. That was yesterday. We'll see. That's the way I'm looking at it now for the shorter term. All right, let's get back to the market. So we've got the SPX.X. And then we've got callers waiting. So let me do this. S&P is at 2198, down 4.5. Leg B, probably a peak B today. I'm still calling this E/A in the weekly chart. Monthly is fabulous. Leg C. Let me go to quickly. I'm going to go to gold because we've got callers waiting. Gold is down 27 at 11.83. I've just not liked it. Why? Because I think it's the dollar's turn to be spectacular. And that's exactly what it's doing. Look at that move. Leg B. That's confirmed for me. This is leg B in the daily. It should go to a C and a D. It's matching all the other indices. It's a leg E, very strong E in the weekly chart. I might even have to change that at some point, but it's broken out. And this breakout in the monthly chart is exactly what I said it has to do, because if it stalled at 100.55 or something like that, then pull back and would say, no, we're making that inverted H that goes to lowercase h that goes to an M pattern. So we're going to go to John in Philly. John, how are you?
Good morning, Basil. Happy Thanksgiving weekend to your family, and thanks for all you do.
Same to you, and hopefully it'll be a very relaxing weekend. So, can I help you here?
Yes, Basil. You've always been very helpful to me in displaying and labeling your triple yield charts. And yes. I wanted to share an observation and ask for your assistance, please, on the 10-year U.S. Treasury yield that I think is TNX is the ticker symbol. And, Basil, my observation is...
John, just before we get cut off for the break, let's do all this. As soon as I get back, I'll have all the charts ready. John in Philly, and we'll be back. Dow's up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour, and the Dow's up 23, S&P's down 5, and we are on with John in Philly, who is one of our participants in the den, one of our very important participants in the den, and we're looking at my triple yield weekly chart, and that has in white we have the 30-year T-bond yield, TYX. In yellow, we have the 10-year T-note yield, TNX, and well, kind of goldish. And in light blue, the cyan color, we have the T-note yield, FVX.X. And look, they're getting squashed together there. This is a very unusual pattern. What's really important about this is it might have recycled. And I was asked a question just recently. Someone said, have you ever, in the history of your looking at the triple yield chart, seen an instant restart on the way up? And all I could say was, I just don't recollect. And when I went through it, the answer was no. So now we've got John looking at the 10-year, which is this brown one, and I'm going to show a goldy color. And I'm looking at on the white background now with the daily, weekly, and monthly. We're looking at the 10-year Treasury note interest rate. Remember, this is the rate. This is not the core instrument itself, which is going down as the rate goes up. They work in counterpoint. And the question, John, is where, why, how, and what the heck, right?
Basil, first an observation to share with you. If one looks at that monthly chart and goes back 7 years, back in the 2010, what one will observe is that the yield on the 10-year U.S. Treasury note of 2.35% was a key pivotal level. Where many times it was hit and rejected. In other words, it fell to 235 and then bounced up, or rallied to 235 and then fell back down. And when it broke through 235, every time since 2010, there have been four or five of them. You've had a big move, and we've just blown through 235 today. The last time we blew through 235 going higher was in 2013, and that was the period you might recall of the Federal Reserve taper tantrum talk at the time. And
right.
Once that blew through 235, that yield went fast, basically nonstop, up to 3%. I'm kind of guessing that something similar is going on right now. Now, having made that observation, my question for you is, can you share with us, is there tools in your bailiwick that can help us make educated guesses and speculations as to if it goes up to 3, what we should be looking for, what we should be using as stop losses if we're speculating it's going there, please?
All right. So there we go. So within the context of chart formations, within the context of the history of the chart that you're looking, so they're two separate things. One is chart formations that we follow all the time because they get repeated over and over again. Within the Chapman wave, where we're looking for Ds and we're looking for troughs on the downside. Within the spectrum of the chart that you're looking at, and if you don't mind, because I know that you're focused on the 10-year, but since they all pretty much doing the same thing, I'm going to show you something that's even more important, and that's going to be the oh man, am I going to remember how to get this? Oh yes, it is the 30-year. Here we go. This is the 30-year UST bond continuous contract. So let me put it into the context of what I can do now, because there's just a few days left, few trading days left before it's the end of the month. And I'm going to do this because I feel that I have a little license to do it right now because the chart pattern is suggesting it so strongly that the monthly chart has actually made a G. I could call it a G/C to get back to a new all-time high in this multi-decade continuous contract. It's going to take something remarkable. And let me just say that at 175, let's call it 176, this is a continuous contract, so that might not have been the exact price because it gets smoothed out. But the high that was made in July on this contract, and I'm going to show it in even a more spectacular fashion. US dot, I think it's P that I can go. Oh, there it is. Look at this pattern. Now, you don't even have to use Chapman wave notation here. You're just looking at this in terms of here is a price movement. I'm going to make that green, and I'm going to make one in red. And I'm going to ask you, just looking at this pattern, you don't have to know what it is. It doesn't matter what it is. It doesn't matter whether it is linked directly to being fixed because the Fed has been wanting to do anything. You know nothing about it. You're only looking at this as a chart. And this is a continuous contract, and it goes to what's going on. Oh, it goes to March. All right, sorry, wrong one. US dot, I wonder if I can, I think I tried a D. Let me see. No, I have to do something else now. All right, US, I've got this. So I'm going to use this chart. The one I used before, I wanted to show you the 30-year up channel. But this is good enough. This is going to 2001, and it takes us through 16 years. You can see that on the last move up, let me move this down a little bit. On this last move up, right there, the price stalled in what I call the Chapman wave inside track, repellent zone. And that was really historically, based on this particular chart, what it said is every time I've gone even to my to a G, a letter G in the Chapman wave, I stalled at either the pink line or just under the green line, like it did when it went to, the G was back in 2008. This last E, no, the E that I'm looking at was in July of 2012. And then we've got another G in July of 2016. Now it shows you, and it says, the importance of a breakout in bonds into the one, in this particular instance, using the continuous contract, which is at 151 and 25-30 seconds. It says that unless there's a decisive 2 to 3 month move, a break into the 180 area, 181 actually, and we're at 151, that would be 30 points to the upside. This is a more serious top than we've had before. It's more serious because it's taken 1, 2, 3, 4 bars to get back to now it's the what's normally the buy zone or the propellant zone. And if it takes that out, there's a real problem. And what we're looking at is look how many times it's gotten there ever since it actually goes back further, but I'm going to take it from June of 2007. It's gone into the propellant zone, the support area. It's managed to be propelled higher, and it's gone up to the top of the channel and to the inside Chapman wave inside track repellent zone. Now it's it's actually in the propellant zone as we speak. It has up until the end of December to try to hold, but if in December there is a break into the 147 area, yields, and now I can go to the yield. I'm going to go to the TY contract right there. Whoops, TY, Treasury note continuous. Oh God, I have to use something else. Can you hold on, John?
Thank you, Basil. Yes.
Okay, good. I'm really doing this because we are on the cusp of breaking down in bonds and having yields change from the Japanization of our bond yields to starting to move into higher territory. I'll be back. Basil Chapman, Dow's at 23. We'll be right back after these important messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 23, S&P's down almost 6, and here we are looking at the 10-year Treasury note interest rate. And you can see this is one of the most powerful moves it's had in quite a few years. It had a big move off the low that was made back in 2008 into 2009. And that continued high until it went towards the top of the channel resistance area. Now, this is going to be very important. What I'm looking at here is probably over the next 2 weeks, I don't think I need to rush into it, but I'm going to be looking at a number of aspects that are going on right now in terms of the market, in terms of yields, etc. Because for at least a couple of decades, I've been talking about at least 15 years to 20 years, I've been talking about the chance that at some point our Fed will be forced to Japanize our interest rates. In other words, rates would go down. They would go down to like zero, almost close to zero. But that also is implying that you've had a 31-year bull market in bonds. There aren't too many things that go on for more than 31 years. So that I'm putting into the pie, and I'm saying something has to happen. So has there been a tidal change? So John, this is really the issue. And your question, I think, essentially pertains to, has the cycle, the massive, it's really a tsunami, has that tide now changed? Nothing has happened. We have no new president. We will not have a new president until January the 20th. It'll be at least weeks and weeks and weeks before anything of substance gets discussed, let alone voted on. So the issue is the market at this particular point saying to us, we are looking at a market that is intrinsically starting to see a benefit in the areas that are very important. You've seen steel move up sharply, aluminum, not all the commodities, but just those select metals. Is this now something that is very different? Then you look at Ford and General Motors and Fiat, and you say, wait a minute, why isn't it filtering? They're selling so many cars. Why aren't they making more money? Well, I have to back off here and just say, at this particular point, from my triple yield chart, I'm going to keep saying that this is an E just for now. There are a couple of things that happen in the Chapman Wave instant restart. When the first move, that leg E/A, is really powerful, going away from the D to the upside, very often it pertains to the chance that you haven't made an instant restart, that it's actually going to go to an F and then it's going to turn down. But in the 10-year and the 5-year, you're already looking at a very strong move that is going parallel. So they're all moving up together. And that would say it would go to a G. It's really unusual in these instruments to go to a G in the 5 and the 10. So I'm just going to say to you, what my work at this particular point suggests very strongly, and I'm just going to move this away for a second. I'm going to go back to the daily and the weekly to suggest that the flagpole that we're looking at in the weekly could have a high-level consolidation at least for the next 3 to 4 weeks, meaning that bonds could go into a range now at the 10-year is at 24, which is 2.4%. It could go a little higher. It could go maybe to the 24, 20 area, maybe a little higher. But it would then have a lot of support right at around 2250 to 22. And that's really what I'm going to say for now. Because if it goes sideways and doesn't break down, there's a chance it can have another spike to the upside. So I can only answer your question because we've got no historical precedent whatsoever. I can only do it via the chart and say that the move up in the monthly chart suggests that there might be a doji candle for December and a pullback into January. So I think that we're getting quite close to the end of the yield rally, but that doesn't mean to say that this little bull phase in yields is done. It means that there's a chance that we're going to have a high-level consolidation, start a very choppy sideways move, slightly higher highs, but also slightly lower lows, and it'll just go into a range that makes more like an oval or maybe a rectangle formation. That's what I'm thinking. That's kind of what I'm looking at. That's what gold is saying. That's what oil is saying. And that's also what, if I'm correct, that the dollar is saying that it's getting quite close. In fact, the dollar, I said to the folks in the den, I'll do a little more work on the dollar, but we're in leg B. And that says that we can't get it, at least in my work, we shouldn't get a top until later next week. So I'm answering your question by saying I think something has happened to say that we won't go back to the low yields that we've seen, at least not in this phase, and that there's a really good chance that if you're looking at the complementary or the opposing instruments, the suggestion here, based even on the TBT, that's the inversion of the TLT, yeah, this could be a leg E. I think that we are getting really close to some kind of, I wouldn't even call it a top, but some kind of strong headwind and some kind of a barrier and a cap on the upside. But at the same time, I think the TBT at 40.94 is probably going to hold the 38s to the 37 support over the coming 3 weeks. I hope that's giving you a sense of what I'm looking at.
Yeah, very much in that last comment basis, the TBT was very helpful. So, yeah, thanks for that overview, and have yourself a fine long weekend, Basil.
I'm going to add, as we're signing off together, I did have a Chapman Wave 5, that new technique that I developed in the TBT, which went right to the 45 level in July. And now look at the strong move we've had on the upside. In fact, I could even start to think of this as a short-term 5 to the upside in the weekly. So I think we're getting real close, and that says that maybe gold has a little bit more to go before it has at least a pretty nice bounce. But in the meantime, dollar is the lead, at least for the next week or so. Hope that helps you. Have a great Thanksgiving. Thank you very much for calling. So, folks, the question came up about the dollar. Let me do this. I'm kind of excited here because my grandkids just arrived. They opened the door and they sneaked in and to say hello quietly. They learned over the years they can come in, but they need to be very quiet. And what we're looking at here is, if you're looking at the, if I use a Chapman Wave 5 in the weekly chart, I would go 1, 2, 3, and I'd say 4, and there's still 5 to come. And this, we have to wait until the end of the month to talk about the monthly chart of the dollar. But at this point, having taken out the 100.51 area, having made a high today of 101.91, it suggests very strongly that the whole area between 101 to 98 over the coming, I'd say, 4 to 7 weeks is going to be very, very important. How does it hold if there is a pullback at some point fairly soon? So we're about to go to a break. Let me just check. We've got a bunch of, okay, I've got a couple of questions in the den and a lot of emails waiting there. I will get to them as soon as we come back. Let me just do this. Go to the front page of TFNN, because I've got a webinar coming up, a series. It's called 3 Webinars, and that's right there. Basil Chapman, simple technical tools to analyze charts. I'm looking forward to this 3-part course on the Chapman Wave, December the 6th, 20th, and January the 10th, 6 to 7:30, and you'll get my newsletter in the interim for free. I mean, it's like giving this away, but I love technical analysis and I love teaching it. I'll be back, Dallas up 29, Basil Chapman, Tiger Technicians Hour, and we'll be right back. I'd like to say hello to my grandchildren.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So let me just quickly tell you simple technical tools to analyze charts. Basil Chapman's 3-session course on the Chapman wave. So this is going to be very important. It starts on December the 6th, and it goes 6 o'clock to 7:30, 3 Tuesdays. And the first one is really, this is what I'm going to do. Let me see if I can do it. I didn't even think of this. I should have done it before. Let's get a naked chart here. Where do I have my naked charts? I think this is the S&P. All right, it's naked enough. I'm going to talk about how to label, how you can get the arch formation, then start the buy signal, and the buy signal should go to a buy mode, which takes you to an E. How you can get the cup formation, and the cup formation, if it breaks out, is a technique I call it's the one I discovered years ago. I call it the Chapman wave cup and ladle, because it goes right through. And if it does that, it says there's a real good chance that you can go to a B, C, and a D. And then you got to be careful. Goes to a D, and that's you got a plus because I haven't updated it, but that should have been a down arrow. Okay, here's the arch formation forming. So these are all techniques we're going to discuss. So the first session will be very, very simple in the sense that I want to keep it as clear as possible. I'll be talking about patterns in the first one. I'll be talking about labeling and why I use the gray A and B sometimes instead of the blue. What it means, what are the implications, just to get used to it. I'll give exercises, etc. The second one on December 20th, we get into the nitty-gritties. I probably will have already started that in the first one. So it'll be the bear chart, and then we start adding the wave count. Then we add the MACD and the slow stochastic. What do they mean? How can they keep you in the trade? The reason why I've been so bullish on the dollar is because the stochastic was way up in the 90s and holding. That's the reason why we've got some stocks that are doing real nice, because I love the way the stochastic is holding. That's why we got a short that was just failing, and it gave us that peak F top. I'm going to be discussing that. And then December, and all the time you get in my newsletter, and I follow up with all the technicals. You can ask me questions. Then December the 20th is a workshop on studying the bear chart. And then we add, on the January the 10th is the one where I talk about the larger time frames. I probably have gone through that before because it's an hour and a half. I can do a lot. And the relationship of daily to weekly to monthly, if you're a day trader, the relationship of maybe 2-minute chart to a 5-minute chart to a 30-minute chart, that's the sort of thing we'll be talking about. And hopefully it'll be just a tremendous benefit. And it's $295, and there's a $100 discount that'll be given for current opening call paid subscribers. I mean, really, I'm looking forward to it. So, yeah, we've got Peter in Park City. Peter, how are you?
Good, Basil. How are you?
I'm very well, thank you.
This is a bigger question other than Happy Thanksgiving.
Yes.
So what I'm like looking at, and I think it fits with your model, especially in your weekly and monthlies, is if I look back at 2008.
Yep. What instrument are we looking at?
Every indice made new lows other than the S&P. And it wasn't until
just a minute, let me just clarify. Now, I might be wrong, but as I remember it, in 2008 and 2009, there was a discrepancy because some made a low in October of 2008 and some made a low in 2009.
The made lows in October.
And the semis.
It wasn't until March of 2009 that the S&P made the low, which became the low.
Correct.
So what I'm looking at right now is the exact opposite. Everything is making new highs, other than the NASDAQ 100. So
and the NYSE. And the New York, the very broad New York Stock Exchange.
Everything else has made new highs over their recent ones. But
yes,
what I think is intriguing is we could pull back here for a bit, correct, do whatever. But until the NASDAQ 100 puts in a new high, which may not even be till March, the markets can still rally to significantly other highs. That's what I want to pick your head about.
Okay. So let me just do this because you brought up really good points. The question I had the other day, wow, give me 1 second. I want to just show something here. Because this was my chart. Is this the right one? I hope so. Here it goes. Yeah, this is the chart that I said, and that's the New York Stock Exchange. It made a high back in September of 2000 at 71.64, and then it came down, had a bit of a bounce up, and then the MACD and stochastic were fading, and it just plunged from the 71.64 level down to the low of March of 2003 to 44.18. That's a 48%, 50% decline. Then it made another high back in all-time high in October of 2007 at 10,387. Plunge, I should have typed these in, down to a low of 41.81 in March of 2009. Huge move. That was a 53%, 52% decline. And then it ran up to PD, and now it's in ABCD. And I believe that I could call this another ABCD to the top that was made in May at 11,2054. But what I showed subscribers was that it pulled back to 96.82 back in, January, February of this year. And then it ran up, and all of a sudden, the looks actually quite good. And the MACD's flat, but acting quite well. The stochastic's up at 87%. This is going to be very important. Why? Because especially if it's in November in the next week, if there can be a move above 10,903.86 to start leg C, I feel very comfortable to say that the NYSE, which has been the laggard, is going to go towards the all-time high of 11,254. And now, for the first time, I'm really starting to get a picture in my mind, because I love to look at it as if it's a jigsaw puzzle. You got all these different components. How do they fit together in time and price? And what I've spoken about for a little while is that I believe that the Dow has the perfect mix at this particular time for this particular market, and it's going to be a leader. It was not the leader to the 2007 high. It went to all-time highs, but it really wasn't the leader. You actually had real estate that was the leader into 2005. And in 2000, it was the NASDAQ because of all those incredible high-tech stocks. This is the third time, and I think this time is going to be the time that the Dow takes us to the all-time high, and then we've got to be careful. So I just wanted to get that out the way. But I think the implication of your comments is that you're looking at a number of instruments which suggest higher prices to come in the monthly chart. Is that correct?
No. And again, in the short term, I definitely see, we can get a pullback, et cetera. But all I'm really watching is the NASDAQ 100, because until it makes that new high, then I think you have the potential of the markets rolling over. But until then, yeah, it's going to be markets up, I think.
So let's just do this. We've got the QQQ, which is really what you're talking about, and that QQQ is in leg B. It'll make a peak B if this month there's no high above 119.66. But if it does that, that'll be C, and even more of a big positive. And I think we're finally starting to see that the Dow is catching up, and the S&P is the next one. But the IWM is the one that really surprised me, because it's still in leg B. It's an incredible move. So, Peter, is there more to discuss, or?
Oh, sure. Yeah, I'll hang for a sec.
Okay, so hold on, and we'll come back, and we'll just wrap it up with Peter. And we've got Joe in Boston waiting.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back, and we're on with Peter in Park City. So, Peter, I just wanted to not leave you without, because I know you're always looking at the currencies, to say that the euro dollar, the pattern that I drew in here, which was the exact opposite of the dollar, where it had the inverted Y formation that looked like it was connected with another U. This is that lowercase h that goes to a lowercase m, and I drew it in maybe 2 years ago. It still looks to me like the euro dollar has to test the left side low of March of 2015 at 1.046, and that's going to be really critical because it hasn't taken that out, and it's at 1.05 right now, yet the dollar has already made its high. That allows the dollar to go a little higher before it comes down and tests that. So this is the relationship I'm looking at here. And the USD JPY, in fact, we were looking at strength, and now look what it's done. Has to be, I have to call this a leg B, just like the dollar. So that's the relationship. So that, I think, confirms what we're looking at, if there's going to be continued relationship of the dollar and market moving higher, funnily enough. So I just wanted to add that just for your information.
Oh, yeah, no problem. No, I was short the euro all morning. But no, so did you say the QQQ made new high?
No, I'm saying that the QQQ, the composite index has gone to an all-time high from the 2000 level. Right. The QQQ, we're waiting for 120.50, I think it is.
Well, I'm watching the NQ and the futures, and I mean, we're even from the high we put in yesterday, we're still 35 points high, and now we're 80 points
right.
Beyond that. Until that occurs, my gut feeling is the market has upside. Once that gets taken out, then I think we could have a much more significant correction, maybe, again, with your C&D on certain ones.
Then we're talking a few weeks
in March,
correction.
Maybe,
Right. So have a great Thanksgiving. Thanks so much for calling. I always appreciate it.
Thanks, Basil. Bye.
Thank you, Peter. Let's quickly go to Joe in Boston. Sorry for those of you who got emails there. I'll get to them. We'll do them on Monday. There's no rush for the XLU. So, Joe in Boston, your question is?
Yeah, I was just looking at AT&T. We've talked about it before. I've got a position. I was looking to actually increase my position. We talked about 3 weeks ago.
Yes.
There was, I think, an opportunity to add, but I
know I did. I felt the same way, and I thought, well, interest rates, it's come down so sharply. We had a spectacular, terrific gain on it with the interest, with the dividends, etc. It's only in leg B. Can I make a suggestion? It's a little high, and I think it has a chance to go to the 39s to maybe 40.30 and then stall. If you want to just play the next point and a half, add a little bit even here, because you will get the difference. The dividend, because I love the way that the stochastic's at 96%. So just don't get carried away. Just add a little bit more. But the main thing that you want to do is to see if it pulls back, how does it hold 38.20 to 37.50? That to me is going to be very important. But it looks like it's trying to form some kind of a base. So either you can wait or you can just add a little bit here. But the next entry point really would be a pullback to make a peak B, test somewhere in the low 38s, and then we'll have to see. Maybe we can look at it again Monday or Tuesday. But that's my recommendation. Maybe nibble a little bit more now.
Okay, you got to love that 5% dividend.
Yeah, that's what I'm saying. So you've got a cushion, yeah, and I think this is the one people will gravitate to. It looks better than some of the others. Hey, have a great Thanksgiving. Let me know how it goes, Joe.
You too. Thank you so much. Cheers.
Thank you, Joe in Boston. So we've been from Park City to Boston. We're all over the show. Folks, let me do this before we're about to break. Have a wonderful Thanksgiving. This really is a time to be thankful, family, friends, just to be alive, to be here. I've had so many deaths over the last, year. I appreciate life, let me tell you. So, and please go to the front page, check it out, and I think you're going to be really surprised and very pleased with what you see. And certainly people have already got my newsletter just the last few days, have already, I think, hopefully paid for it. So have a great weekend, and thank you to my engineers, Al and Steve.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.